Are you sick and tired of getting a clear bias, waiting for your setup to form, price then moving in your favour, going close to your TP to then just reverse stopping you out? The likelihood is that this issue is nothing to do with your strategy but your targeting, and using standard deviation can fix this issue. What's good everyone? Today's video is going to be about standard deviation projections. I'm going to be explaining what they are, why they may be helpful to you, how to anchor the fib as well as the settings needed, and I'm going to give a full top-down example using standard deviations to catch a high probability setup. So, firstly, what is standard deviation used for? Although I personally don't use these day to day, they are a great way to find targets, potential points of sabotage / reversals, and as a great extra confidence to your strategy. And who knows, when I've been making this video, I've definitely been thinking this is something I probably should be incorporating into my trading, so I guess I'm teaching myself as well. So just quickly, before I show you how to use it, jump into some examples. This right here is what you want to set your Fibonacci settings to. As you can see in the bottom where the template's highlighted, if you use it for anything else such as finding premium discount, etc., you can save them as a template and then have your standard deviation as its own template. That's personally what I do, and these are the settings. So you're going to want 0 and 1 on. You're also going to want -1, -2, -2.5. Some people use -3 as well. I personally don't, and -4. Most of what we're going to be doing is going to fall into the range of -2 and -2.5. I think that's just me. I don't take massive targets. I'm a bit less risky in that way. However, I will be showing some good examples with -4 as well. Okay, so I'm going to be showing you where to actually place the Fibonacci. So firstly, we want to see a manipulation leg. In this example, we are bullish, so we want to see price make a reverse pattern to the upside. So as you can see here, we've got this low, a high, a lower low, a higher high. This is a smart money reversal, almost looks like a breaker block as well. So now we have found the reversal, we want to highlight the manipulation leg. This is from the swing high to the low. This is, as you can see, where price manipulated to the downside before shifting up, before we eventually continue to the upside. This area is the area I've highlighted blue here, so we can very clearly see what it looks like. Okay, so here I've got another example where I've just highlighted the manipulation leg before I jump in onto the charts and show you how to actually draw the Fibonacci on here. So as you can see, we're looking for price to reverse to the downside. We have a high, a low, a higher high, and a lower low going through here. You could also have used this low, however I prefer a close. So we've then made this reversal here. So again, this is a manipulation leg. This is what you're going to be drawing your Fibonacci off of. Okay, so here you can see now, I'm on a live chart where you can see we've got this manipulation leg. What you're going to want to do is you're going to grab the Fibonacci, you're going to draw it from the swing high to the swing low. Let me just go into the replay here so I can show you it playing out. So as you can see, we now have our 1, our 2, 2.5, and then our 4 down here. So just staying on the 1 hour for simplicity here. Ideally, we want one of these areas to align with an extra PD array. Again, this is used as a complement or an area for targeting / potential sabotage or reversal. And again, we always think price could react to PD arrays, whether that's a fair value gap, order block, swing low, swing high, etc. So if we start at the 1, we do have this gap here. We are in a fair value gap. However, I personally like to use the 2 to 2.5 area. So if you look here, you can see we have this swing low right in the middle or just below the middle of the 2 and 2.5. So this could be a great area to target. We also have this fair value gap, which is in the 2 and starting above it, and this could be your low hanging fruit. But for this example, we'll use this low. We also have the 4, which is down here, and again, does it align with anything? Not really. This could be a 4 fair value gap. I can just quickly come up and see. It isn't. We filled it here. However, we do have a low just below here, but I would kind of stay above the 4, so you can maybe use this if you want to take price all the way down. So we'll use this as our target. I'll let it play out. Again, we have our smart money reversal here, and we'll see if it gets to this standard deviation. Okay, so as you can see, if I just draw this line out right here, price did eventually move down. So if you got in up here, this could have been a great swing position, or even on the lower time frame, and you could have took it all the way down to here. So again, manipulation leg, you draw the fib off here, ideally between the 2 and 2.5. However, you can see we did respect the 1 nicely. So if you was on the lower time frame, maybe stops were around above this high or something, you could have very nicely took a good trade into here. However, for this example, price did come down into here and there. Okay, so as you can see, I'm on the same chart. I hadn't actually looked past this point, but again, showing how good the smart money reversal combined with standard deviations can be, we've got another setup playing off just from this target. So if we skip forward a few candles here, you will see we have now created another smart money reversal. So we've got this low, this high, this lower low, and then this high. So drawing out the manipulation leg right here, we have this highlighted zone. We can then again draw a fib from here up to this high again, and we can now look and see if there's anywhere to target. So again, in my sweet spot, we have this high right here, which is just above the 2 standard deviations, and we also have the 4. The 4, we will go on to a high time frame like I did before just to see, and there you go. You can see we've got a 4-hour fair value gap right here. So this could be a very good opportunity to target the 4th standard deviation, as well as here, 4-hour high as well. We do have a fair few amount of highs for price to get to for there. However, we'll play and see. We've respected this area very nicely, which again was a standard deviation. Smart money reversal right here. We'll see if we can play it all the way to the upside and into this fair value gap. As you can see, price did come up into this zone, and then there you go. So you could have had 2 back-to-back great setups by just using standard deviation with the smart money reversals. This looks very interesting in here. Obviously isn't my time up until around here. However, I'll do a full top-down analysis of this setup right here, break it down and see if there's anything we can learn from it. Okay, so as you can see by the timer in the bottom, we've had a little look. I like to try and do my videos quite raw. Obviously I do a little bit of planning, but I just like to say what I see on the charts, make it as authentic as possible. Anyway, let's go up to the daily chart. As you can see, the daily is in this order block. We had this down close candle before it went up. The previous day, which is the day we formed, taken into my target. Price moved higher. This is a Friday, so obviously market profile wise, it could be a slower day. However, we've got a daily fair value gap up here, could be a nice area to target, and we've respected this order book, especially the body of it, pretty nicely. Coming down to the 4-hour here, we swept this low, closed above it, came down 3 times below this low, each time failing. So you can then drop down to the 1-hour. You could have gotten up here. Obviously there's a chance you would have got stopped out because we did have this deep retracement. However, if you was below this low or this low and targeted one of our standard deviations, I'll just draw the fib back up quickly, you probably would have been fine, especially if you targeted the 4. But I'll just quickly see if you had your stop loss here or 1.7, or you could have gone up to here, and this obviously is a very nice position. However, as you can see on the 1-hour, this is PM session. We then came into this 1-hour fair value gap right here, as you can see. Price respected it, so we can drop down to the 5-minute, and again, the thing we're looking for on the 1-hour, that smart money reversal we had here. So price manipulated, failed to close below, we then closed above this high, giving ourselves a market structure shift, which you then could have either entered from here, which is how I like to enter, stops just a bit below or below here, or you could have chose to enter on this fair value gap, even put stops here, whatever. I think they all would have worked, we'll soon see. And again, we'll just go up so we can do our targeting, and you could have either targeted this high or again the full standard deviation. And as you saw before, I'll just quickly let it play out, but we know how it goes. So there you go, this trade again. You would have took some drawdown, wasn't really ever close to stop loss low. And you would have had a very, very nice position, 15.2R. Or obviously, the 1 hour, there's many entries you could have took here. You could have even took entries coming up into it, to be honest. Especially, looks like there would have been some sort of London opportunity. Actually, I'll go into that and I'll give you another thing. I'm not sure how long this video will be without that, so might as well add some more value. Okay, so I've quickly dropped down to this period in time I was just talking about. As you can see, we have this 1 hour fair value gap right here, and if I'm correct, I've just changed the fib. Like I said, you can press this templates button up here, and then it has all of yours, so you can use them. Obviously, you won't have mine, you'll have the ones you've created. So we come into the equilibrium of this 1 hour fair value gap, price is moving away. I don't trade till 3 AM New York time, which is 8 UK time. So I'll then go 1 minute usually. We had this shift, I had skipped till we had this shift. However, you could have entered around here if you do trade the normal kill zone, so you would have ended off here off the shift of these highs. But we did then shift this high here. You could have put stops, I believe, here. I'm not sure if we would have got stopped out, we'll see. And you could have targeted this high right here, we'll see. And price rocketed up to stop loss right here. So as you can see, I took that setup, obviously hindsight, but using everything, there was 3 setups from here to go up to that target, all in different sessions as well. Looking back, we had the Asian one, we had the PM session, and we've now had this London session, and the swing. I'm pretty sure the swing was Asian. Correct me if I'm wrong. Yeah, it was. So we had 3 sessions, 3 different types of entries on 3 different time frames, all off the same process. And I'm going to be honest, standard deviation is definitely getting added into my trading. It's really good. As you can see, it very much helps you, because let's say you was just taking this, you could have thought, oh, am I going to target here, or am I going to target one of these fair value gaps? But these fair value gaps, this one here, obviously this one already in, none of these got respected. There's 2 right here, and this high, which it ended up going up anyway, and obviously eventually it did end up going to here, which potential for almost a 20R. That's passing 2 challenges, or put 0.5% down and you're passing a phase 1. So yeah, it's very much makes it targeting a lot clearer. If you're someone who struggles with knowing where to target, then this is the video for you. So yeah, I hope you enjoyed. I hope there's some value. I've got so much more, and there's so much to teach, there's so much to learn. So yeah, I'm just looking forward. I'm back now, going to be making videos again. I've really enjoyed making this video. I've been smiling the whole time. So yeah, I'll speak to you next time.